afternoon, everyone. I work with Near Foundation with ecosystem infrastructure, and I'm joined by three of my ecosystem partners. Uh, we have Amos from MetaWeb, we have Phil from Airflow, and we have Matt from Pantera. Today, we are going to discuss a couple of topics. How can we unblock institutional capital using multi-chain user experience? Before we begin, I would like to ask all of my colleagues to quickly give a quick introduction about what they're engaged in and how do they work with Near and in which capacity. Over to you.
Sure. Everyone, I'm Matt Stevenson. I'm the head of research at Pantera Capital. Mostly engaged on the research side, everything from stable coins to crypto AI to chain abstraction. And so we're involved with Near because, of course, Near is a portfolio company that we're really excited about and has been for a long time. So we work really closely with y'all.
Hello, everyone. My name is Amos. I'm the founder of MetaWeb Ventures. MetaWeb is a $30 million fund focused on early stage crypto investment. So some of our LPs, including Near Foundation, Sequoia Capital, Dragonfly, SNZ, and more. In terms of my connection with Near, so I was actually part of the earliest team of Near. Wore multiple hats back then, across BD, marketing, product. I'm very excited to see Near become what it is today.
Hi, everyone. My name is Phil Hedayatnia. I'm the co-founder of a company called Airfoil that we do design, brand, and dev for a lot of projects across Web3, now over 200 projects across. I've also worked with the Near Foundation and proximity teams at a few projects, including an online kind of web wallet that you can use to send digital assets called Keepom. And we're based in Singapore, Seoul, and SF.
Nice. Thanks for the introduction. So we've all been discussing and we have seen this wave, right, where the entire crypto industry is moving towards a multi-chain future, right? Where one way or the other, whether it's through cross-chain bridges or multi-chain supported wallets or smart contract interactions across chains, these are some of the ways that we have seen. But also with Near, we have heard a lot today and also earlier this year, the chain abstraction narrative, right? Where you can abstract the account, but also communicate across chains using chain signatures, among others. So I want to know what is your opinion and what is your input or what feedback about how do you look at chain signature or multi-chain in general and the future of it from a research perspective, Matt?
Yeah, sure. A couple interesting ways to look at multi-chain, right? Like there's a couple different theses you might have. One is you might say, well, look, ultimately the user doesn't really care about the chain that much, right? And in that case, we just sort of have like these network effects of liquidity in certain chains. And so that's why people are stuck there, but they ultimately don't really value one particular chain more than another for any reason. And so you might kind of say that thesis is like the multi-chain future is just inevitable and it's just a question of pathing our way there. Another view might be that like chains actually do matter and people do care, but there's these natural points of differentiation. And I think actually, I'm not sure where Ilya really falls on his opinion, but he's been actually pretty good at pointing this out as well, the sort of like trade-offs and differences across the different approaches from the, along the modular, monolithic, multi or app chain spectrum and how those might differ, right? And you could imagine multi-chain is sort of falling along those dimensions instead, where we actually do care, but it's just the case that we care, that this chain does this thing well and this chain does this thing well. And then if we want to work with both, we don't want to have to deal with thinking about, or keeping track of private keys across both, right? That might be one where each chain retains a little more market power, but you would still see a multi-chain sort of future. So those would be two approaches. You could think of others, but like those would be the big two. Yeah.
Right. Amos, what do you think about it?
Yeah, I think it's actually mind-blowing in the sense that change how people kind of view, multi-chain and how people can interact with, different apps and different chains. Because we always know that one of the biggest problems about crypto is that it's actually very fragmented, which is almost, contradictory to what it's really about originally, right? Because it's supposed to be decentralized, supposed to connect all the dots together using this, distributed ledger system technology. But then again, in reality, like the user experience are very, separate from one another across chains. So I think this new chain signature approach could, if it works, it could actually change how people, transact. Because right now, for example, I personally have, 50, 100 accounts spread across different chains for different applications. It's just, a very frustrating experience, right? And oftentimes, like the other day, I realized, oh, I actually have some more USDT on this near wallet that I haven't, take a look at for, I don't know, like half a year or so,
Yeah.
right? And then there's some like accounts on Ethereum that actually have some, nearest Aurora like, actually on there, and should I, put that into like a better use that other than just sitting in the wallet, right? So I think, what I really look at is like this whole like stack of near, both like from I guess from DA, from all the modular stuff, from near itself as a powerful like L1, plus account abstraction, chain signature. Can really combine all those like moving pieces together and then can provide like a unified, multi-chain experience. Because at the end of the day, I don't think users should actually care that much about like what app they're operating with, what account, like on what chain. Like it should be as easy as Web2, right? I just open up the app, then I can just start interacting with it. So that's my opinion.
Yeah, very well said, Phil. So, Phil, you work very closely with some of these products that you design, right, for the projects and the founders. What do you have to speak on this topic?
For sure. I think that when founders are really crypto native, I think they're decent at navigating the trade-offs between different ecosystems and especially when they're going for a crypto native audience, right? Getting somebody who's already downloaded, 3 different wallets to download a fourth one isn't as much the issue. But I think, one part of our work is we try to work with large Web2 companies, with IP holders, with studios, with labels, stuff like that, and get them to start building in Web3 because there's so many important applications of the tech, right? Especially we think about like creator economy applications, enabling artists to sell their songs online and receive better margins, having close fan relationships, things like that. These things that we talk a lot about in Web3 in theory are just far better on Web3 rails than Web2 rails. But when we actually get in the conversations with those players to get them to build, they're all saying, okay, which chain do I build on? What are the kind of unique aspects of that development environment? If something happens to that chain, if that chain goes down for whatever reason, does that impact the investment that they're making? And so they often don't get past those conversations. And so a lot of stuff doesn't get built. We've been hired to build a lot of prototypes of Web3 applications for traditional players that haven't shipped. And it comes down to that almost every time, or the specifics of working with a particular blockchain. But on top of that, I'm worried about the degree to which we're burning people. When Web2 players choose to build on a particular blockchain, have a bad experience building on that chain, or their users don't show up. In the case of Starbucks that launched a Web3 rewards program on Polygon, the issue, as I heard from them, was that very few people interacted with it.
That's correct.
And a big reason for that is because, they had to be somebody who was already onboarded to a particular chain. So when that happens, do you think Starbucks is ever going to make an investment in us again? Until there's another crazy bull market that's even bigger than this one, I don't think so. So I think that the longer that this fragmentation problem exists, the more people will actually repel from building on Web3 rails. And so I think like solving this is like almost like an existential threat to the work that we're trying to do.
Right, very well put. And I think you touched upon a couple of very interesting points. The first being the user experience. Indeed, we'll talk a bit more about it. The fragmentation of the assets, also the identities of users on multiple chains. There are other topics as well that we do not want to delve deeper, but we spoke about it briefly off the stage, like security and interoperability as well, right? So that's also something that chain signatures or chain abstraction as a whole really solves for the industry. So going back to the user experience part, I think if we go a little deeper and talk about the challenges that we currently see, right, of users in terms of handling multiple wallets, right? Amos, you briefly spoke about having 51 wallets and you do not know, what sits where, or you have not used a couple of them for years. Do you want to stress more about, the experience on the wallet side, but also bridging assets, but as well as, paying different transaction fees or different consensus mechanisms, anything around that in terms of multi-chain environment versus
Yeah.
what you would see in a chain abstraction world?
Yeah, I definitely want to talk more about DeFi because I guess until right before this panel, I didn't have the realization of, what's the benefit of chain signature and outcome abstraction for DeFi. I didn't really realize there are actually multiple of those after talking to Ilya. So for example, right now, the only way, I guess, the only like live use case of, Bitcoin DeFi is that you have to, use wrap BTC, which on one hand is centralized, but also limits like the potential of it, right? But in theory, you can build this like a multi-chain, lending app or multi-chain, DEX, using, Near's tech stack, chain signature account abstraction. And for example, you can collateralize your Bitcoin on the Bitcoin network without necessarily have to, bridge it. But then you can then use that collateral and then start, let's say, borrowing from like a near-based, lending protocol or like a Solana-based lending protocol, which is part of this like multi-chain, DeFi stack, right? And then say, let's say, in the case of, liquidation, sure, the Bitcoin is still on the Bitcoin network, but it just get to send from one address, which you currently own, to another address because you sign the signature for that transaction when just those conditions are triggered, which in the case of this is liquidation, right? Same thing could be applied for like a multi-chain DEX. So what I'm really envisioning is like right now the DeFi experience is so far away from the centralized exchange experience, I would say. I'm like large Binance user. Binance Earn is great. I can trade there, perps, spot. It's all one in a single platform. But there are two issues. One, obviously, is the centralization risk of Binance itself. What if it got hacked, things like that, right? There are obviously like bunch of like regulatory issue, right? So for us, we actually move almost our funds away when CZ actually right after FTX is now even CZ getting sued by the U.S. government just because we're so worried about what if anything could happen. But then again, if you have the same type of experience fully on chain that you actually have like full control of it, that's actually great. But right now, just because like this fragmentation, the lack of technology to support it, you actually cannot enable like a similar experience. So that's why people still go to Binance, right? But then again, eventually, I hope that DeFi are able to match the experience. And then another, I guess, like a real world pinpoint for me is that like right now, let's say the near DeFi yield for lending is actually super great. For stables, I think for both, I guess, refinance and borrow is something like 25 to 30%. That's great for, for you just to deposit USDT and USDC. But when I try to actually do that on Binance actually doesn't have enough near-based USDT. They need to replenish that, with Tether, or in the case of USDC, need to with Circle, and there's usually like a delay, right? And in the ideal world with, chain signature, and I don't have to do that because,
Yeah.
I can just like do it directly. So
Yeah, I agree. And we also briefly spoke about the challenge with bridging, right? So where you have to deposit a large amount of sum on for the liquidity of the bridges, which is so vulnerable to hacks. We read about these incidents every now and then. So on the gaming side, I would want to pick your brain very quickly, Phil. You've spent quite a lot of time. So in terms of use cases of multi-chain on the gaming, what do you want to share of the challenges you've seen, and how could chain abstraction help there?
For sure. Well, I think that when the Ronin bridge got hacked, it sent a chilling effect to a lot of the work they were trying to do in gaming. It showed that you could have a Web3 native company with folks who are experienced in the gaming space, and still, if there's some sort of vulnerability somewhere in a bridge, it could potentially tank a game. And so that makes a lot of those conversations, I think, very, very hard. The other piece is if people have to get multiple accounts. I can't tell you how many different gaming-focused wallets I've seen kind of come to the forefront over the past few years, and they've all been trying to solve the same problem, which is game publishers have expressed that they don't want people to have to create multiple different accounts for Web3 gaming experiences. It adds a lot of friction to Web3 onboarding. And so even if somebody can just have one single account and then, interact via MPC with other chains, right? It's not even about the chain fragmentation, it's about the account fragmentation. The way that I've described it is, I normally say that one principle of design that we care a lot about is this idea of give first, then ask. Before you're asking for more time or effort from your users, you need to give them some sort of value, to give them a taste of what they could get if they continue down that road. And I think the problem is in crypto, we flip that the other way around. We say, go download this wallet first, then save a seed phrase somewhere, then maybe you can find a game you can actually play. If the user account already exists, the user can begin to interact with the game. Maybe they can't buy in-game assets, but they can begin to get value from the game. And then when they want to load in-game assets in the game, maybe they'll transfer assets onto that particular chain, right? So I think that having a single user account that people interact with solves a massive usability problem. Maybe the example I would give that actually comes from music. So there's a platform, given I work in crypto, I expect I know most of the stuff that's like coming up. And one day there was an artist that I really like, and he issued an online version, first 100 copies of his album. And if you buy one of those copies, you can get put in a chat, interact directly with the artist, meet other fans. I was like, oh, this is a cool idea. I like this guy. I want to support his work. Went to the website, put in my credit card, bought a version of the album, interacted with chat. And then I clicked in because I want to understand how they built it. I clicked in and realized that the asset was actually on-chain on Polygon. And at no point did I realize that there was crypto even involved. It's not even pitched on the website, but it is an on-chain asset. If we have enough of those experiences where users can just effortlessly sign in with their social account, get those assets, and then begin to use them, then once people are interacting in Web3 apps on a regular basis, then the composability side can come in, right? Then you can start to connect those applications together. So I don't think it's as much that like users really have to be aware of the crypto side of things. The value from that like cross-app interoperability will come once they've had a bunch of successful, good experiences, and those apps just natively work together.
Right, very well put. And we see the same with DApp on Near, right? So these things sound very interesting, very promising, also great in theory. Of course, we have some working version, but imagine a few years later where there are 20 chains with their own abstraction story, right? And that's where, Matt, you have this specialization of standardization, right? I would want to hear your thoughts about how do we standardize this across the industry so that people do not talk about, from my chain to my abstraction story, and it becomes a real Web3 abstraction story in terms of standardization and, the processes around it.
Yeah, definitely. So there's a couple different ways to think about it, right? Like one way you'll think about standardization is from a technical perspective, and that work can be done depending on how it works out. Obviously, one of the things that's kind of nice about Near is it's already architected in a way that's very friendly with chain abstraction. But I think standardization can have a different meaning if you start to think about this, a little further into the future, maybe a year or two, right? Which is at a certain point, if this is just a pure sort of intent-based thing where the user is just saying, I want to send this here, and that they are really agnostic to a chain, then you're having to kind of like figure out what exactly a chain is, right? It does start to really matter who's doing the chain abstracting and what they're choosing to count as a chain or a token and whatever. And that sounds like a challenge. It also winds up being a sort of huge opportunity. You can kind of analogize it to like a time when you started to get international trade and they had to figure out what a tomato was, which turned out to actually be a really hard problem, right? And that's the sort of thing that you would kind of need to figure out. And there are pretty interesting working groups working on problems at least adjacent to this and starting to broach this that I know Near's involved with, like Frontier Research, where probably the longer term future is something that sort of like identifies these things in a like, I guess you'd call it like a coarse grained sort of way, right? Where you sort of figure out like, here's the sort of thing that a user wants when they say they want a chain, these properties, right? And then identifying those properties. And so in the future, I mean, if it's a multi-chain world, you're probably looking at categories like that, right? That reflect user intents. And that becomes an interesting place to play. Like who's in charge of doing that? That winds up being instrumenting a lot of what blockchains wind up being about.
Right. So we've spoken about all the various topics, but let's also go to a couple of real world examples, right? So on Near, I don't know if you have had a chance. We actually did a chain abstraction demonstration in Denver with Sweat, We have proximity building, something we saw earlier by Mike. We have something built by Mintbase. We also have a couple of ecosystem partners that have built something. What are your ideas or thoughts that you're very excited about that multi-chain or chain abstraction could bring to the Near ecosystem?
Oh, we should give it to Amos first, right?
Yes.
He already had a good one.
Yeah. So besides the two you talk about, I think there are like two more use case. Obviously, like Ricky talk about East Blue. I think that's a good one. Because right now, already knows, which is, a protocol for you to index and then inscribe on top of Bitcoin. You can launch fungible token and, non-fungible token or NFT on top of it, which is pretty cool. It attracts its own audience. Like, I'm not an NFT person. I don't understand why some of these are so expensive than others, but there's definitely an audience for it. And then there are people trying to build, DEXs, or different like NFT applications on top of those. First of all, it's actually super difficult to build because once again, Bitcoin is not like a smart contract chain, right? So even if you have it live, you have to do it through like a layer 2 or like a side chain. And then
So far.
so far, sure. Yeah, but then like why don't you actually just build it on top of Near, right? Using like chain signature, account abstraction, you actually do it. Like the Bitcoin NFT still live on Bitcoin, but the actual, the transaction, the user experience can actually on top of Near. And just one more use case before I hand it to you is the other use case on Near is the Near protocol. It's one of the largest DeFi protocol on Near, doing liquid staking. We actually incubated the project. The team is actually going multi-chain, and right now they're focusing on multi-chain liquid risk staking. So from a user perspective, you can risk stake ETH, you can risk stake Near, you can risk stake, SOL, you can risk stake even Bitcoin on top of, Linear and then Eigenlayer for better yield. That other part I think is also crucial because Near is not the only chain that doing, chain abstraction, right? I think eventually all those will require some like security guarantee because any of the is MPC network and Linear could be like a part of it. I believe it's actually one of the first project doing it. So super excited about it.
Yeah, I would just sort of like double down on your NFT example. I think one of the things that's pretty interesting from the history of NFTs, like going back, I guess, a ways, right, is you found the fact that like people would bridge NFTs from one thing to another and users didn't seem to care. I think Emblem Vault bridged something from an early NFT protocol called Counterparty to Ethereum, and people treated them just like they were Ethereum NFTs and traded them that way. So there's already pretty good reason to believe that NFTs specifically are a little bit chain agnostic. And that it's more like, I don't know, just because I did some like nerdy research on this, I guess I would say it seems to be a thing that people count as an NFT if it's recognized, as some unique token across like a bunch of different nodes. Well, that describes basically every chain. So in that case, it does feel like a user basically wants their chain abstracted. And that's useful. Also, it happens to be the case that it's really hard to bridge NFTs credibly, at least in the sort of like roll up L2 way. I don't think Arbitrum or Optimism do it at the moment. So that's an issue as well, and one reason.
Right. That's a good point. And that's something that we already have with the Mintbase where you can, mint something from OpenSea using Near.
I wanted to throw in as well that I'm really excited about the applications in emerging markets. We're an investor in a company called Parallax. They started out doing crypto billing and invoicing. They ended up focusing in on the Philippine market and helping knowledge workers in the Philippines get paid from abroad, which in the status quo is laden with tremendous fees and corruption and all of that. But one of the struggles that they face is that their clients may want to pay them in different digital assets, but they want to pay across different chains. And so where we see users churn in the status quo is when they need to get additional wallets or set up their own their own self-custodied wallets to collect those assets, right? And so like with a small team, there's no way we can support every chain natively within Parallax. So the ability to do that with, again, just one account is massive, and it feeds more people into the crypto ecosystem. The more people accepting payments and earning on crypto rails, the more people who then can potentially invest in things like DeFi, can buy digital assets, participate in Web3. But that front door needs to be super clear and easy to use. Otherwise, it's difficult for people to join in.
Right. Very well said. And that also includes the entire developer experience and developer tools, right? Great. So that brings us to the end of the panel. If there are any questions from our fellow audiences, we'd be happy to take them. Okay. Thank you so much. Appreciate your time and inputs.
Thank you, guys.
Thanks, everyone.